What's going on, people? It's GBP baby. Welcome to our weekly review and expectations for the oncoming week. I'd like to say hello to all my new subscribers. My latest video is getting a lot of views, so I'd like to say thank you for that. Even though I thought that, to be honest, I thought the backtesting videos were going to do worse because they are very boring, but it seems to have got a lot of attention, so I'm not complaining. But we'll get straight into things. This is our GBP USD 4 hour with the new week opening gaps, and then I'll mark out the week which we just traded, finished trading, and you'll see how we moved from one Sunday opening price to another as per usual. So we had a very bearish week this week, and you can see how we've consolidated around these opening levels here. We then moved to this area, eventually broke through it, returned up during I think it was CPI inflation rate numbers, and then we broke down lower and started to work our way toward this area. You can see as soon as we dipped below this opening, we traded back up back to this Sunday opening. So now in the oncoming week, I'd expect us to be consolidating around between this level and this level for a bit before we break out and start heading to another level. It's crazy because this week opening, which we traded down to, is back in from the 2nd of April, 31st of March. So it just shows how, the algorithm does respond to old levels. No matter how far ahead, it's still using them as guidance in order to move the market. So that's interesting. I do suggest you guys go put all your new week opening gaps in so you can see the same thing I'm looking at, because it does make things a little bit more clear. Like every week I tend to look at these and I can see, okay, well, we have these levels resting up here, we have these as potential reaches if we're bearish, which we are, and it just helps to really frame a plan for the week. Furthermore, you can see how we consolidated a lot between these levels. We have about about 5 different Sunday opening levels all around here, and that's why there was a lot of consolidation before we eventually broke out, kissed it goodnight, and then left. Obviously we traded below this level, but as soon as we traded below, we turned bullish, breaking market structure, traded higher, took out these highs, this swing high, traded to this, but we haven't actually touched it yet, which is interesting. And then we found support here, so next week should be interesting. I did want to break down a little bit more clearly this week's price action. It wasn't the best, I'd say. Monday and Tuesday were a bit messy, but after that it was pretty smooth sailing in regards to just moving straight down and running into some levels that I had marked out previously. More specifically, I marked out all this week I had my eyes on. It was this imbalance that I saw us trading through. Eventually we traded through that, and then on Thursday and Friday we kissed it goodbye by the looks of things, and then we've started to head down to the next levels. And we also traded to consequent encroachment of this wick, which was also another level I had my eyes on. Obviously, if you've been watching me for a while, you'll be fully aware that I had these levels marked out already. However, for all my new subscribers and viewers, this is what we were anticipating happening, and it happened pretty nicely in all fairness. So I'm going to just quickly mark out the consequent encroachment of this wick, which is 50%, and then we'll drop down to a low time frame and have a better look. I'll quickly get rid of this because that's for later. So if we go down to the 1 hour, you can see how Monday we started moving lower. We had our announcement on Wednesday for inflation rates, took out these relative equal highs, and then dropped aggressively and started running towards this wick. Now the next target in terms of bearishness would be the low. So this would be my next draw on liquidity. Now that we traded to the 50% level, I want to see that wick, that low get taken out. So before I get into my expectations for next week, I do want to quickly show you some divergence that's happening amongst GBP, Euro and USD. So bear with me whilst I just set that up. Right, so if you've watched my channel before, you would have. There's been times when I've mentioned divergence amongst GBP, DXY and Euro. And what's happening is DXY is trading higher aggressively and Euro is also trading lower. For example, DXY clearly took out this swing high here and Euro's taken out this swing low here. Whereas pound has struggled to even reach anywhere near the same swings and it's like showing a lot of strength. And because of this, it means that eventually GBP is going to have to catch up, probably quite aggressively, in order to get back into sync and into line with what dollar and euro are doing. Because we can see that dollar and euro are working together, because as dollar makes higher highs, euro is continuing to make lower lows. However, GBP is clearly not making those low lows. Like, don't get me wrong, GBP has been moving down, but it's not moving as aggressively as euro, and because of that, it's going to cause a six sister approach, as it's going to be a six sister environment, which is a term which coined by ICT, whereby GBP being the six sister is going to have to catch up. So this is also what's adding to my bearish bias and my expectation for continuation to the downside. So I'm going to drop back into just GBP and I'll start to mark out my targets in terms of where I want to see price continue to draw to. So I'm going to go to the weekly, and again I'll just quickly go over last week. So last week I had this drawn out as my drawn liquidity. You can see we traded into that, we traded through it, and price closed within it, almost at the low of it. This is a volume imbalance, only being traded through on the upside, so that's why I was anticipating price to be traded on the downside, and that's what we saw get happen last week. Well done. So now so now my next drawn liquidity in terms of the weekly would be down here. There's another fair value gap, and this has been traded through on the downside and the upside, making this an inverted fair value gap, which means that when price does eventually reach it, I expect price to turn around and give us some kind of retracement or go into some kind of consolidation. So this is I'd say this is my longer term draw, so I'm going to leave that on my chart this week. We'll keep it in blue, and then when we drop down to the daily, we'll be able to see some more targets within that range. As I mentioned earlier at the beginning of the video, we traded to the 50% of this daily wick, and you can see that we've reacted to that bullishly. So now my next target on the sell side would be the low of that wick, so I'm just going to mark that out as sell side liquidity. Like so. There's also a fair value gap resting down here. However, I do want to see price trade down to this blue area first, because like I said, I'm expecting some kind of resistance, probably quite strong support from this area, especially looking at how big these order blocks are. This is a big bullish order block, so when price trades into this area, I do expect it to have some kind of turnaround. I'm also going to mark out the 50% level of this order block because of how powerful it is. You can see that we had a break in market structure as price broke here and traded through this high. So we know that when price comes back to this area, we should have, like I said, a similar effect in that it should trade into it and turn around accordingly. So I'm going to mark out the 50% level of this order block, because that should be the maximum it should reach if we are to, have some kind of retracement. I hope I'm making sense right now. Obviously, being bearish, we want it to trade down there, but what I'm saying is that I don't expect it to trade past the 50% level before we start to see some kind of bullish price action, is what I'm saying. Yeah. So 0.5, 1.22385, and I'll make that red and dashed. So here preferably is where I'd want to see price reach as a low in terms of before, if it traded straight through, there's probably something really big going on in the world that would cause that. Also, if we drop down to the 4 hour, we can see that we have another bullish order block here. This is I forgot what the name of this is. I don't know if it's a propulsion block, but basically when order blocks are stacked on top of each other, for example, this is stacked on this order block is stacked on this order block, which is a part of this order block. Let me draw this out to make it a lot more clear. We have this original order block, and now I'll make that green. And then you can see that this order block is stacked on it, which means that this area here, this order block is the one which we should see price react to, not this one necessarily, which again gives us confluence as to why this red line being the 50% level of the daily order block is a good draw for liquidity. a good draw for the market even. I'm messing up my words here, but hey ho. So let's go back to the daily and we'll have a look at how price traded on Friday. So you can see that we traded up past this swing high here, and we also traded into this up close candle here. Recently I learned about immediate rebalancing. I'm not sure if this counts as immediate rebalancing, but I'd like to think it does, meaning that now that we've traded from here down to here and we've returned to here, I'd now want to continue to see lower prices. However, before we move lower, I would like to see some kind of move to equilibrium of the trading range. So we'll drop down to the 4 hour and we'll have a look and see what we can find. So as you can see, we have this swing high and this swing low. That would be the current trading range we're in because market price is here. So we can mark out the 50% of this range and we can find out where price is likely to draw to before we want to head down into the lows, into the south side liquidity. So here's 50% level, 1.23889. Then I'll get rid of that. And you can see that we've already tapped it. So when price trades in a range and then comes up and taps 50% level, I do now expect it to continue lower. However, purely because of due to the way the market delivers and manipulates, I wouldn't be surprised if price did return to it one more time before wanting to go lower. As in, we might see price trade higher on Monday and Tuesday, create the high, and then move lower. Because I can imagine there's a lot of stops, and it'll probably want to engineer some kind of liquidity resting up here so that it can take that to then be, so that smart money can use that to then distribute down here. So I'll drop down to the 1 hour and it'll probably be a lot more clear. So you can see as we traded up here, we took out this swing high here, which means now, as far as I'm concerned, I don't want to see this high get taken. Furthermore, we traded into this fair value gap resting here. So as far as I'm concerned, this range from this high to this low is now traded through. So any movement higher now would simply be manipulation in my eyes. So what I'm going to do is I'm going to mark out the order block, the bearish order block, and that's the highest I'd want to see price trade before moving lower, because as far as I'm concerned, this is now protected due to the way that we took out this swing high here. Hopefully I'm making sense right now. Again, it can be, it's not easy, especially not to explain, but we'll drop down to a low time frame and see what we can find. Massive fair value gap, and I wouldn't be surprised if price just fluttered its way up there, took out stops above this swing high maybe, and then moved lower. Or it could engineer its own liquidity, which means make a high, make a low, take out that high, and then start running for this low and this low and this low. But my eyes are definitely set on this low here. But obviously first, in the more near term, we have these lows resting down here. So I'm going to put south side there. And I'm not going to go down to any lower time frame. I am going to take a look at dollar though, because although I'm saying all this is all assuming that dollar is going to continue higher. Meaning that if I want to see higher prices, I want to see dollar obviously post. If I want to see lower prices on GBP, I want to be seeing dollar suggesting higher prices. But yeah, that's pretty much my expectations for this week. It's nothing too crazy. I think it makes sense. It should make sense. But as far as I'm concerned, the way we've been moving, it does look like price is going to be running for a while after this liquidity resting here, and as I said, into this order block resting right there. So let's go over to dollar and see what we find. And we'll start with the weekly. Dollar's been very bullish over the past 3 weeks, as you can see. And when you see dollar moving like this, it shows that dollar is clearly, reaching for some kind of, high or buy side liquidity, such as this swing high resting here. So I'm going to mark that out. But you can see that we just traded to this bearish order block this week, I believe. So, but we have not traded to the open yet. So price, like, let me make this clear. also want to see where the 50% level could be. Right. So as you can see this week, dollars traded aggressively through this fair value gap here, and then through this fair value gap here, and then into the wick of this bearish order block. But we haven't reached the open of the order block yet, which is why there's still likelihood that it's going to trade up to it. I've marked out this fair value gap because this fair value gap now should act as support, meaning that if price does fall for Dixie and we are still bullish into this order block, then price should find that this should act as support. So we'll drop down to the daily, and you can see an even bigger fair value gap now. And and you can see that we also traded right into this volume imbalance here, and you can see our price turned away from that. So we'll drop down to the 4 hour, and looks like there's some liquidity resting below here, and obviously there's this fair value gap here. But you can see how we traded through that weekly fair value gap, found support and traded higher. Traded through it, found support and traded higher, taking out this buy side liquidity whilst doing so as well. So it's possible that early in the week dollar might want to reach up for this, and if that's the case, then it's likely that GBP might be trading lower earlier in the week. But I don't want to say too much. If you know me, I don't trade Mondays, especially considering it's going to be a bank holiday this Monday, meaning I'm not expecting too much price action. And obviously after Monday we'll have a much better idea of what kind of price action to expect. This is simply just a review based off last week's price action. Excuse me. So yeah, I don't really want to get too much into dollar right now, purely because there's not much to say other than, like I said, I'd like to see it reach this the open of this weekly bearish order block, and I'd like to see this continue to act as support so long as GBP wants to continue on lower. But yep, that brings us to the end of the review really. I want to do a quick rundown on everything I want you to take from this. 100%, you need to make sure you realize that euros made a lower low, dollars made a higher high, and GBP USD has not made a lower low, meaning that GBP is likely going to need to catch up. I want you to realize that we've traded to the 50% level of this daily wick, which means that our next target would be the sell side liquidity resting below that. Furthermore, I do believe this is what you call a rebalance, when price trades up to the bearish order block. The wicks cross over here, so I don't see any reason for price to want to trade above this now before taking out sell side liquidity. Once it's took out sell side liquidity, it can do what it wants. However, it hasn't done that yet on this time frame. I'm talking about significant sell side, which is why I've got my eyes on this wick specifically. And yeah, expect some kind of return to equilibrium. So like I said, go in your charts, have a look at the trading ranges that we're in. For example, this range, even this range here, we can look at that, and you can see that it's likely that price is going to want to offer some kind of premium for smart money to get in, which happens to be where I've marked out this beautiful bearish order block, which is likely a nice place to sell from in order to reach into these lows, assuming we continue to be bearish, which I am, especially looking at these stops here, 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 and of course this beautiful low here. But thank you for watching, guys. Again, hello to all my new subscribers, welcome. Don't forget to like the video, and also if you're new here, you might as well subscribe. Like 70% of my viewers are not subscribed, so it'd be a great help. And I'll catch you tomorrow on Monday. Peace.